Good morning, everybody. All right. I thought we'd just start off with a simple look at the Dow and what's happening, where it's at. I see it's down here a bit. Not sure it's going to be negating yesterday's turn, but it's kind of not kind of, it's an exercise, if you will. But what I post in the advisory letter each week and update this as part of the letter and just marking off things that occurred on the Dow chart. Support, resistance, minor, major, topping tails, as you can see, different patterns. And this is something I suggest everyone do, especially those that are learning how we look at things. And I'm going to put together that thought process and, what you should be looking for. And it kind of sets up things as to what your expectations are as to what's going to happen. So one of the things last week was the 200-day was down here. Prices had fallen. There was a topping tail, a bearish 180 degree turn at this prior pivot high. And as you apply this to what we teach, it sets up a bias as to what you think should happen. And so our bias was that 200 would be tagged and buyers would be there. Maybe it would come down to this major support level where there was a retest of this pivot low and reversal. There's an unfilled gap down here. There's a void and so on. And so I decided to put this up because part of our discussion yesterday in the green room was about some of these patterns that have come down pretty sharply, since last week with the news that came out, as the Fed chair was speaking. And someone were talking about, oh, is it climactic? And I said, well, it's not climactic, but we call them semi-climactic, where they're going to become a bounce. And the reason I said they weren't climactic is because as we look at most of these patterns, there was this period of consolidation. It was kind of painful in a sense over the last couple of weeks because it was so erratic, and where there were days they were going nowhere, and then up and then back and going nowhere and so on, and then the sharp drop. So getting this sharp drop, and I've got the futures over here, the Dow futures, and this is just the Dow that everybody talks about. You had this igniting move from a consolidation. So prices coming down to an area of the 200-day moving average, which everybody's looking at. Technical analysis is a self-fulfilling prophecy, and when you're looking at the most common things like a 200-day moving average on an index like the Dow, the whole world is looking at that with an expectation that there are going to be buyers there. And that's helpful to us, even as day traders, let alone swing traders. But we need to put that together with how did it get there? And this erratic price action, this a lot of sideways price action. What does that communicate to us? That on some level, institutions, traders believe that this could hold and prices would go up. And obviously others did not, because that's why there was this battle going on in a relatively small trading range. Remember, a part of our discussion last week was that prices were trading in a trading range within a bigger trading range. And that displays a lot of indecision and uncertainty. So now this leg down into the support level is okay. Buyers should step up there and hold on. What is it that brokered the institution's belief and allowed them to go lower? The chair. Well, Robert, first, some believe what they believe, regardless of what was going to come out of his mouth. But, why were they selling up here? Because they believed that at this point in time, they should be selling, taking profits out of things. And why is that? Because of what we cover in the letter extensively, as well as what we cover here as to why were the markets correcting. Interest rates bottomed out and were going up. The dollar bottomed out and was going up. Oil bottomed out and was going up. And the combination of those things seasonality, September, coming October, was a good reason to be taking money off the table. Now, all this choppiness was, hey, news is coming. What do I do? Maybe this guy's going to say something totally unexpected and the markets will rip higher. And so they obviously, now we know that they didn't. And we're on this support. And now people are thinking, can it possibly hold this area? Well, it did yesterday. And maybe it's just going to chop around. You can see what's happening here this morning. Prices are coming down to retest this area, and that's okay. Sometimes, and that's actually better if we're actually going to make some kind of a minor bounce. But when we see a consolidation and then an igniting move down, our belief is that it's going to continue to go lower. So, when we see weekly bars, right, part of our discussion yesterday was that and I tried to bring clarity to the idea of climactic versus, let's call them mini climactic, looking at a higher time frame. This wide range bar is igniting. And this, coming from a consolidation, says this is an igniting move. Whereas, say prices continue to drop over the next several weeks, and we see a wide range bar on the weekly, and we probably would on the daily, say we get a continuation move in a wide range bar, we would see that as being an ending wide range bar. And then at that point, we'd see, I mentioned, is the dollar going to be at resistance? And we'll look at the volatility index and so on. Yeah, well, the government shutdown. Yeah, I mean, all these things are playing on people's minds, and we know government shutdowns are a temporary thing. Causes this uncertainty and all that. This time may be a little bit different, meaning we got some hardcore Republicans in there that truly want to make this country adhere to the financial restraints that the majority of us apply ourselves to, meaning I have this income and I measure that against what I want, okay, and what I can spend money on. And there are those out there that, of course, get credit cards. And that's what the government basically does, where they can print money and they print and print. But there are those out there that get credit cards and they just spend and spend and spend. And eventually they go bankrupt and, somebody chases them for the money. Do I think there's rotation out of industrials, staples, and into growth? No, I think there is rotation basically out of everything at the moment. There are certain things that are holding up better than others. I displayed this chart yesterday, I believe, and we talked about this in the newsletter, and these are the S&P 500. So these are broad sectors across the market. And what do we see? Big distribution patterns. Now, oil has been accumulated, so there's been some movement into oil, but maybe that's to do with Saudis and Russia and versus actual demand for crude oil. Maybe some degree there is, but some of it is based on a smaller supply because Sleepy Joe's cutting off the pipelines where oil could go down. But when we talk about rotation, and we start looking across at least these major S&P 500 ETFs, where is the rotation into anything? And when you say growth, over here, technology's holding this level for the moment, but I don't see anything that looks like it's ready to go up. So, but we can, we start going into subsectors and finding other things. But, I just want to point, this is a good exercise for marking up charts like this. And what I would suggest, and what I did many years ago, starting out, computers weren't so, they were pretty archaic at the time, but print these things out and put a pen and a pencil to them and mark them up and then go back to them, a week or so later and see, what did I miss? It's a very good exercise. I just wanted to share that with you. So we see, prices are down here this morning. They're not collapsing. We'll see, if this turns around, turns it back up today, and maybe we make a short-term bottom, but we're going to put that in the context of what happened. These are the S&P futures. So a break, um, it's so far it's holding at this pivot low. We've got this level down here in the 200 MA. We really have to look at, the spiders. There's the futures. Not everybody's looking at the futures, but we know that many are looking at SPY and SPX. So yesterday was a gap down reversal, but happened after a sharp move down. It violated support. So a little bit of a relief. You see what prices are here, down, gapping down to the bottom of a green bar. So obviously short-term bearish price action. I'm not sure we looked at this chart yesterday. Maybe I think we did, with a measured move kind of projection. Maybe it'll get down here. We'll see how this all plays out. There's an unfilled gap. You should know where your unfilled gaps are. Set alerts. You don't have to, the computer will watch them for you. Just see if I still have quotes here. I do not on SPX because I wanted to discuss this. But so we're at the bottom of this bar. And I just know as I look at SPX and think about where I don't want it to go to, and I'd have to look at the strikes. Did maybe Jake usually would tell me, maybe he did. Can't post messages. Okay, no problem. No. Okay, so prices are down here. When they're gapping down like that, the premiums usually will pop down below. So we definitely would like to be below 42.50 if there's premium there. Up above, a pattern like this could easily get back up to yesterday's high. So being, say, up to the prior day's high, this 43.55 area or a little above would be fine. Looked at YM. Clearly, this is broken down. It's got to go down to the bottom of this trading range. You can see on the weekly chart. Qs yesterday, they held here. So, so far, some of the fangs are holding, and Apple for sure. We're going to see if it holds this support, which institutions now are probably biting their nails, waiting to see if this is going to be violated. You see the pop up and the 100% retracement back down. So setting an alert back there. You look at what drives this market. We know that there are times, VN, if I can type. Hanging on support, learning, look to the left, it's hanging there, gap down. Where is it today? Gapping about halfway down. Look at that wide range bar on the weekly chart. One of my comments in the letter the weekend was, turn things around from that. You're asking for a miracle. Miracles don't happen too often. That's an ominous looking weekly bar, especially after a retest of a prior pivot high. All right, interest rates are down a little bit. And so a little bit of a disconnect there, meaning the markets are down, interest rates are down. It's been going the other way. And yesterday, interest rates were up a little bit, and the markets, while they got down, buyers stepped up. So their interest rates starting to inch back up again after the gap down, but clearly in a solid uptrend. Yeah, McGraw, what FT is saying, McGraw is like a gamma guru junkie kind of speak. He's hardcore on the dark side of the gamma thing, but it's useful information, but it could be brain damage. I think if you get too deep into it, if you keep it simple, it's good information. All right. I can let Dan get going here. Transport stabilizing a little bit, 200s down there. Uh, Bitcoin just a big mess. And so we're going to be dealing with this messy kind of price action for a little while. And eventually it's going to resolve itself. And I think is what typically happens is it'll set up the end of year buying opportunity. And I look forward to that. That's going to be a good thing. Oil pulling back a little bit. All yours, Dan.
Good morning. In the green room, we always end the day with a bias for the next day. And what I call the 4 index ETFs, the 4 horsemen, I was saying that diamonds look the best for a bounce. But I don't like taking gap risk unless I have a high bias that it's going to follow through in that direction, and I'm willing and wanting to take that gap risk in that direction, and I wasn't yesterday, but my bias was over yesterday's high for a continued bounce, and now we obviously see that's not happening. I think courtesy of Jamie Dimon and JP Morgan rattling the markets again with warnings about higher rates and so forth. Yeah, he's a market mover, that's for sure. And he's respected. But we actually have our portfolio is much more short than long, so we're benefiting from the gap down. We actually into the close put a put spread on in FedEx. This was earnings, nice wide range engulfing, and you can see here, just bobbling around here near the closing price in the upper part of that igniting bar. So that's holding well. I don't have a single alarm going off, actually, long or short. So where our positions are holding through this. I did post a BBV as a long over yesterday's high. Nice breakout, nice consolidation at new highs, and got an engulfing bar continuation. So, this is a different sector. So with the market weakness, sometimes that might propel sectors like this. This IRM, we actually into the close bought a bear put debit spread. I just noticed we're getting a nice gap down on that. Looks good. Let me set new alarms. We entered Starbucks yesterday. Nailed the entry on that. 61.80. So any questions on the opens, just ask me. That's not many earnings here at all. CTOS. Wow, that thing's slopping all over the place. Hey, Cesar. All right, so nothing to do. Range now, we'll come back to you. MTIQ, no volume, you're gone. SNX, gap down, 98. That's a no-brainer call spread candidate. If they're liquid and any juice. So down, 88.90. That's a nasty downtrend. We'll just come back to it. A wing, I think, got an upgrade. I'll watch it. Greater than 100% retracement, pull back to minor support. Nice close yesterday. That could be a put spread idea. Yesterday's high, dunking upgrade, but no pattern. That's kind of just a counter trend swimming upstream. No interest. Bizzer, I think, announced some car production thing. And yeah, even though this is down a lot, that's a power move. It's not a CLIMO the way we like to see, because 20 MA is not in alignment. And that's going to take a while to heal. Look at the weekly, monthly are nasty. What's up with this thing? I don't know if this is earnings or what. Recent IPO. It was a spinoff of some company. That's what we call a pro gap. Look at that thing. Wow. Boeing actually, look, Boeing, I said, over yesterday's high. We can do a put spread. Netflix, I just set an alarm. It's not, again, Greg was talking about Climos yesterday. This is not a quality one. But I set an alarm at 385, and then we'll take a look at it at the time, because then it's kind of it's far from the 20. Remember, and we've been doing MT lives for over 5 years now, and this would be we're looking for the turn. So this could be the start of a turn in a downtrend. So just for a little counter trend, maybe put spread till Friday. Beef Berg, something's up with this little guy. Wow, it went up to over $4 this morning. I threw it in this bottom right chart. We'll just keep one eye on it. Onto Alex mentioned yesterday. Here's another good example of the word the turn. So it's down a lot in a sloppy manner, but 1, 2, 3, 4, 5, it's a 6-bar turn. It's a buy setup on the weekly and an uptrend. So I told Alex yesterday, I wouldn't buy it over yesterday's high because you got all this resistance. But if we can get a 1, 2, 3 or 1, 2, 3, 4, then I might consider it, particularly if the market's holding at the time. And then I also checked a put spread, but I think it was crazy spreads. Here's a little buy setup, bull flag. That's on the list. Let me set an alarm at 214 and change. Williams-Sonoma, Greg mentioned. What the heck happened with that yesterday? That's a bullish gap from a monster bull rectangle. Look at this, for 3-4 weeks, it stayed in the upper 40% of that bar. That is strength. Now, I did not see this yesterday morning. Had I seen it, that would have been a beautiful 5-minute high. Stop prior day's low. Weekly, monthly are in alignment. But Monday mornings are my busiest because we have new trades, open trades. I'm juggling. Unless somebody in the room flags it for me, I'm not looking for new trades. I got too many, but that is a quality one. And since we're talking about quality ones, here's another one somebody in the room did bring to my attention, but too late. I think it was around $27. It already fell a lot, but this is a big descending triangle gap breakdown. Look at that. Those are the type of gaps I absolutely love. Gapping just below monster resistance. Weekly, monthly were in alignment. That was an A+ setup yesterday, and somebody in the green room found it, but like I said, it was too late. I think I told him, was it you, Patrick? Somebody, I think I said short a third lot and look to add on the bounce. There's another one Greg found. We'll watching on a pullback. Aries, it's just hanging in there. I like to keep both bull and bear ideas with alarms. So then when I switch, we'll always trade something on its own page, so to speak. But Otherwise, I like trading with the broader markets and sector, but we'll be getting a bullish turn in the market here for a bounce one of these days. And if we were able to negate this gap down right now in the spiders and close, I would even say above 431.50, just eyeball and retracement, then I will be fully bullish tomorrow over today's high for that bounce somewhere 435, 437-ish, 8, somewhere in there. And it's just a if, All right, the Shea alarm. This is a continuation short. Continuation short idea under yesterday's low. If somebody wants to watch that for us. Starbucks low, nice. Starbucks daily, weekly, monthly. All right, so we have a nice open gain in that. Coke, nice. We can move stop break even now. These are all open shorts we have. All right, thanks, Stu. All right, Coke. First, third target. We'll do 56.38 for $1 gain. I haven't looked at that woke company in a while. Good. Wow. Yeah. Wow. Look at the monthly. Is a bear flag sell setup. That is ugly monthly. And daily, weekly, but the daily is too extended without a monster stop. B&O short. It's not a good daily at all, sir.